oportunidades ahora mismo nos están arrojando la renta variable, la renta fija. Vamos a hablar con Alliance Bernstein, con Teresa Kian, que es Product Director en Alliance Bernstein. Teresa, thank you so much for being in Negocios Televisión. Good afternoon.
Good afternoon.
Teresa, 2023 has been a mixed year, but we're seeing right now a more positive picture emerging with regards to inflation and interest rates. From an equity perspective, we've seen recent concentration in the market. Can you comment broadly on the current environment?
Yes. So the global economy really remains resilient. With the US, we're expecting the US to likely outperform, as we're seeing really divergences between developed market countries in the current environment. And you're absolutely right, inflation has come down. When we look at all the key metrics with regards to inflation, it has come down. And we believe that price pressures are actually going to fall further over the next few months. So all in all, we see that central banks are at the end or near the end of their tightening cycles. So we're not expecting any more rate hikes in the US, although we may expect one more in the euro area, according to our economists here in Europe. So what does this mean for markets? It may mean, of course, that we are likely to see some volatility in the near future. So, with regards to central banks, it makes monetary policy slightly uncertain and subject to change. And then you referred to that concentration in the market. You're absolutely right. We saw significant concentration in the market at the end of Q2. And we've since seen a broadening out of that concentration, which is very good news for active managers. And as you know, that concentration was focused primarily on 10 stocks. And to name but a few, NVIDIA, Microsoft, Apple, Amazon, really the direct beneficiaries of AI and generative AI's potential to transform business. So we have seen a broadening out, which is good news. And we are monitoring valuations. We're seeing more attractive valuations outside of that top 10, which again is good news.
You just spoke about volatility, and I wanted to ask you about this. Is now the right time to be thinking about volatility as investors are excited about the recent market gains? How should investors think about implementing such a defensive strategy?
Well, that's actually a very good question. In today's environment, in a rising market environment, and actually, if you look at one of the slides I sent through, in today's market environment, it's actually easy to forget that volatility can strike at any time. Volatility, we can't predict the market, we can't time the market. So actually, we feel that now is a great time for investors to think about that defensive plan that they need in order to diversify that equity mix. Diversification, time horizon are all very important factors. Conversely, when markets are falling, that isn't a great time either to think about defensive equities, because very often investors, fear for the worst and actually come out of the market really at the worst possible time, locking in those losses. So in terms of implementing a defensive strategy, we believe that investors should focus on characteristics like quality, stability, and price. And what do we mean by that? Well, by quality, we're looking for those companies that have consistent cash flows and measures of profitability like return on invested capital. In terms of stability, we're really looking at low volatility or less risk relative to the broad market. An attractive price. Price will always be a consideration. And really what we're looking for is those companies that are less susceptible to wide market swings. So in all, we're looking for those quality compounders with sustainable business models, as well as companies with good capital stewardship and also positive ESG behavior. That's really important in an environment like today. So all in all, we feel these are the characteristics of companies that really will deliver on that medium to long-term capital growth with that risk diversification for our clients. 2023 21 was a rising market. 22, we saw significant falls. And while this year is a rising market, we've seen significant uncertainty up to May in particular. So it's really wise for investors to consider low volatility and look at diversifying that equity bucket in today's environment.
With only discussion about technology and AI, artificial intelligence, dominating the news, where does that leave defensive strategies?
Well, I've previously talked about, allocating and finding companies within traditional defensive sectors of the market, like healthcare, like consumer staples and utilities. But we're also able to find these unexpected sources of defence and these broad sources of stability within other sectors like technology, like financials, and like industrials. And then if we hone in particular within technology, we are broadly diversified within semiconductors, software, solutions. So we like companies, for example, with platform network effects, the Microsofts of the world. We also like companies, tech companies that offer mission critical data and have proprietary analytics. So for example, we like the Wolters Kluwer of the world, that's the Dutch Information Global Services and Information Services Company. And then we also like the tech enablers, these technology companies that operate in the background. From an investment point of view, they provide us with that recurring, stable revenue stream. So all in all, when we look at performance of these companies and that cohort of companies in 2022, for example, versus 2023, in the period January to September, technology in itself saw significant declines during that period. Technology declined on an absolute basis by 32%. The broad market declined a little bit less, 25%. But when we look at our QSP cohort of stocks, it declined significantly less. But a rising market is also important because from an investment perspective, we're also aiming to outperform the market over time. And we want our investors to think long term. So that rising and participating in the market is also important. So again, coming back to technology and that cohort of stocks for QSP, how have they performed this year in a rising market environment? So in the period April to June, for example, the market was up 6.8%. Now technology more than doubled that with an absolute return of 14%. And when we look at QSP actually delivered 16% over that period. So all in all, we're looking at those fundamental drivers of companies that are able to deliver on that quality, resilient businesses in order to outperform over the long term.
What does all this mean, Teresa, for the rest of the year?
Well, for investors, as I said, it really means paying close attention to the market. We're absolutely cautiously optimistic, but really the risks have not gone away. There are some key risks there. Inflation is higher. Rates are certainly higher. They're higher for longer. So we have to bear all that into consideration. Our analysts are looking at the fundamental drivers of companies, looking at those characteristics of companies that are able to overcome any headwinds that they're likely to experience. Then in particular, we're looking at valuations and finding attractive companies within that cohort of stocks. And then we're not trying to time the market. We're trying to broaden that opportunity, but at the same time offer that risk mitigation over the long term in order to deliver on those superior risk-adjusted returns over a full market cycle.
Teresa Kian, Product Director at AllianceBernstein, it's been a pleasure to speak to you here in Negocios Televisión. Thank you so much for being here.
Thank you very much. Thank you. Bye-bye.
Bueno, pues nos estaba hablando